Welcome back, folks. In this video, I want to provide you with a model, which is my favorite model that I call my bread and butter setup, that will help you get funded if you are disciplined and patient and wait for the market to set up, okay? Now, every day prior to the Open of Asia, I provide students inside of the VOP community the bias, okay? So in this video, I'm going to provide you with real trades, okay, that VOP and myself executed on Friday and a few from earlier in the week. Okay, so we'll start with Friday. Friday, I mentioned that my bias is to the downside, and essentially I'm just looking for a pullback down to a 4 hourly fair value gap. And from there, we might reprice higher or consolidate. Okay, so that was my bias for Friday. Now, if we look at some of the setups on Friday, okay, the basic model that is my bread and butter setup is the bearish breaker. Okay, so the market is coming down. Now, I execute at very specific times. Okay, so for Asia, my favorite time is 9 p.m. or 9:30, okay, and 10 p.m. So I need to find a setup in that time zone in alignment with my bias, okay? So the bias is down, clearly mentioned here, right? We're looking for a movement back down into a 4 hourly fair value gap, right? Now, let me very quickly show you the higher time frame. So here is basically last week, okay? 4 hourly is bearish, right? So moving down, so we're up here somewhere, right? This is Friday, 6 p.m., Open of Asia. Moving down to a 4 hourly fair value gap is the objective, right? It's clearly mentioned here. We are moving down to a 4 hourly fair value gap. So when we look at the chart, that's either coming down to this level, right? Or to this level. There's a tiny 4 hourly fair value gap there, okay? And this is where we're starting the day. This is 6 p.m., right? Opening right there. So if you look at the range that's possible, it's down to here, right? Over 250 pips, or potentially down to that little fair value gap there over 370 pips, okay? So that's the objective, right? That's the objective. We need to move down to a 4 hourly fair value gap, okay? So on Friday, here is the Asia session, right? Now, all I'm looking for is a bearish signature in line with my bias, and I like the bearish breaker. So here we have a down candle, and we have two up candles that sweep liquidity on the left, and then we completely engulf that area, right? We go through, this is important, we go through and we close through that down candle, right? The open is enough, okay? So we have a bearish breaker because the two up candles have swept liquidity. The two up candles become a bearish order block. We close below the open, and then this candle, right? This is 10 p.m. It's pushing up into that bearish breaker, right? That's our signal to go short, okay? Now, on this particular trade, I announced the trades when I take an entry, okay? So here's my announcement in the community that I've taken that entry, okay? Based on the bias, I've already told them in advance what I'm looking for, but now I'm telling them I've taken the entry, okay? Because I've seen the setup. This is on a lower time frame, 1 minute time frame, okay? And I said I'm targeting the New York lows. So if we take a look at the chart, okay, this here is the New York low. So we're getting up here in short, targeting New York lows. If we turn on the session, you can see we've hit target straight down to the New York lows, okay? That was a beautiful trade, right? All the way down there, 160 pips locked in, okay? Students also engage with price, okay? And here I'm telling them why I've selected their target. Very clean, equal lows down there, okay? They're the short, and that's the target, right? And students are also engaging and able to profit on that setup and learn at the same time, right? So lots of students are engaging and seeing success in that particular setup, okay? So that's my bread and butter setup, right? I look for breakers. That's what I want to see. I typically like to trade reversals. So if there's a bullish breaker or a bearish breaker, okay? Now, I think I also posted the exit, right? So there was the exit, right? In from the breaker down to those New York lows. This was a different trade, right? So ignore this. This was from a previous day. This was a long setup, okay? It was also posted on my Twitter profile. I haven't had a chance to post this one yet. I don't think I've posted this down movement on Twitter yet, but I will do that soon, okay? So let's now, what I want to focus on is price action for Friday, okay? So we know the bias for the day, right? So when I say Friday, I mean later in the day. So I've walked you through the Asia session trade, okay? From here down to the lows of New York, right? Now I want to talk about the New York session trade, right? Because I follow the same model. It's my bread and butter setup. And what I want to teach you is that you only need to master one setup, okay? And if you're consistent and you're patient and you wait for the setup, it's an easy way to get funded, right? And pass your challenge, okay? So on the 4 hour time frame, right, we're clearly bearish, okay? So we've traded Asia. This is a 6 p.m., right, candle. And this is the trade that we've traded down, okay? And this is now New York. So we can, sorry, London. So we can see prior to New York, we're bearish, right? So we should only be looking for bearish setups, okay? This here is the 6 a.m. to 10 a.m. New York candle, okay? Now, prior to getting to 6 a.m., we can see we're bearish on the day as per the bias, right? The bias has already established what we're looking for, right? We're looking for a movement down to a 4 hourly fair value gap, okay? Now, what I will do is I will mark out the premium PDRAs, right? Remember, this is prior to this, okay, because this is New York, okay? So you mark out your premium, and then I'm going to show you how I traded this on Friday inside of the New York session, okay? Now, this is the news announcement. This is at 8:30, okay? And the market's moved prior to that news release, okay? Now, there's no need to trade the news. Sometimes I will trade the news, right? But there's no need to, okay? If you're trying to pass your challenge, you're trying to get funded, avoid trading the news. There's no need to. I'm going to show you that with the same bread and butter setup that I've already given you an example of, you can find those same setups, right, in a market that is predisposed to go lower after the news, okay? So you can see what the news has done, though. It's pushed the market up into premium pricing, right? As well as on the 4 hour time frame, 4 hourly time frame, 15-minute time frame, and the 1 hourly time frame, the market's also pushed up into premium. So how do we trade this? I'm going to drop down to a 5-minute chart. I'm going to show you how easy this is. So long as you study the charts and are patient and trade at the right time to manage your risk, okay? So what do we see here? This is the down candle. This is basically our swing low, right? Swing low that pushes price up. What is this? This is our breaker. These up candles are our bearish order block. They take out liquidity, okay? So now that we know we've jumped into premium, I'm going to take this off, okay? Now, I want you to look at these candles here, okay? I'm going to put a box around them. These candles are inside this up candle, so we can ignore those. So I'm going to put a little box around there, okay? Because that's just time distortion, right? So ignore the candles that are inside this up candle, right? This is important, okay? And if you ignore those, you basically have 1, 2, and 3 up candles, okay? Because these candles that are shaded in this box are inside of this up candle. We can ignore them. That's just time distortion. So what do we have? We have our bearish breaker, which is our swing low, right? And 1, 2, and 3 up candles, okay? And we've taken liquidity, so that becomes our bearish breaker. Exactly the same as what I showed you on the Asia short, right? Down candle, up candles. We'll come straight down through there, okay? Below the swing low, shifting market structure. That's our breaker. That's our bearish order block. Exactly the same here, okay? We come down through the open of this down candle, which is part of that swing low, okay? We have a break in market structure. We have our breaker and bearish order blocks. Now, any push up into there at the right time is potentially an entry to go short, okay? Now, a safer entry is to wait for when you get a close below the low. You don't have to, but that's a safer entry, okay? And you'll still get a push up. Now, that is a better entry for another reason, and that reason is that once we get that close, right, with these 2 down candles below that low, okay, what that actually tells us is that this bullish fair value gap, which is a bullish signature, where the market has come down and repriced higher, and if it's going to reclaim that, should go higher again, but it's failed, right? So we're getting information from the closure, okay, below not only that, but below that bullish fair value gap with these candles, right? That's your safer entry, okay? And all you're looking for is that same push up, right? Which is this up candle, pushing up into this, right, which is our breaker, and touching the bearish order block, right? So if I just mark a line, actually let's put a square. So anywhere in that zone, right? You can see this up candle is coming into this sequence of up candles. We're ignoring the inside bars. So that becomes what? Up candle, which is a bearish order block, okay? We have a change in state of delivery, so this now becomes a bearish order block. This bullish fair value gap has also now changed roles, right? It will now hold price, okay? So this bearish order block is coming into this sequence of up candles, which is a bearish order block. In itself, makes this a propulsion block. And we're expecting price to immediately reprice lower, okay? So easy targets are going to be back below this swing low, where we have a lot of sell stops residing from people who have long that market, okay? People have long that market because during the news, the market's taken out liquidity, right? And people have taken that long, okay? Okay, so that's one target. Very straightforward, okay? From this zone here, anywhere in that zone down to there is over 150 pips, okay? But on a high time frame, we can also either take partials there and look for something that is a bit more obvious and a deeper discount, which is the objective, right? Was one of these 4 hourly bullish order blocks as a target from up here, okay? So if we're still trading and we've got more bearish signatures, then the next zone to take profits is going to be this small little 4 hourly bullish fair value gap, which the market reached down into from that setup, right down to there. And so you can take partials of 150 pips and trade deeper, maybe close to 180 or 200 pips, right, on that movement down. Okay, so exact same model. This is my bread and butter setup. I love to trade the breakers, okay, whether it's a bearish breaker or a bullish breaker. A few other trades from earlier in the week. Okay, so what's this? This is Monday. Okay, we have the same thing. We have a down candle, 2 up candle that take out liquidity. We have moved down. Okay, and look at this. This is 9 p.m. on Monday, pushing up into the bearish order block as well as the bearish breaker. Look at the bodies, right? The body of the candle staying within that bearish breaker. That's right. Easy target will be back down to this 50 gap. Okay, so down to there, and easy 150 pips. Okay, with the same setup here again. Right, this is now later in the day, and the time's important, right? I always try and find something at the new hour. Okay, so here's another one. We have a down candle, up candles that take out liquidity, right? Essentially, what this is doing is coming up into this bearish signature, right? So coming back up into that bearish signature. Notice how price is respecting the midpoint of that bearish order block here at 9 p.m. And here again, we have a down candle, up candles that form out bearish order block. We go straight down. And what time is this? This is now the new hour, right? Into the bearish order block and bearish breaker. Easy target's going to be back down to that swing low. Notice that we're respecting the bearish order block that was created earlier in the day. So a movement from there to there is another 100 pips. Okay, easy model. You just got to keep it simple. Don't overcomplicate it. Trade at the right times and have a bias for the day, right? Then look for your setup that you've mastered, right? My bread and butter and my favorite is the breakers, right? You can see this week, all I've done is I've traded the bearish breaker. This is 9 p.m. This is new hour. Okay, at the end, so this is just before the lunchtime session. Okay, clear liquidity pools. This entry is coming down into inefficiency. Okay, this entry is coming down into liquidity. Okay, and we can also look at, as I've shown you, the Asia trade, right? On Thursday, breaker, right? Bearish order blocks down again at the right time, 10 p.m., brand new hour. This one here that I've walked you through. Okay, on a smaller time frame, 5 minute. Okay, exactly the same. We have our breaker, bearish order block, breaking market structure, pushing back up into the key bearish signature at what time? This is 9:30, targeting a liquidity pool or a high time frame discount, which is that bullish 50 gap on the 4-hourly time frame. So you got to practice the model, study your charts, and I guarantee you, if you work hard, you study the charts, you practice, and you manage your risk, and you enter at key times that I've mentioned throughout my YouTube videos, and identify your key setups, it'll be very easy for you to pass your challenges and get funded. Hope the video is useful. I will now talk with you in a future video.